Venturing into the realm of biotech stocks is like stepping into a world where risks are high, but the rewards could be stratospheric. These companies are not just in it for the profits. They're at the forefront of groundbreaking advancements, making them hot prospects for investors in 2024. The biotech sector is a fascinating arena, offering the thrill of potential windfalls alongside the promise of contributing to groundbreaking medical discoveries. Whether it's the big pharmaceutical giants or the nimble biotech startups pioneering cutting-edge therapies like gene editing, the possibilities are vast. While the journey in biotech is known for its ups and downs, the potential for market outperformance is substantial. Now let's dive into the most promising biotech stocks that could be your golden ticket in 2024.
At Novo Nordisk, we have more than 100 years of history and expertise, working together to defeat serious chronic diseases. Now, we are coming together to change the story for every person living with obesity.
When it comes to prime biotech picks for 2024, Novo Nordisk stands out. The company is gearing up for a stellar fiscal year, with Wall Street expressing high hopes for the sales potential of its flagship diabetes drug, Ozempic. Fresh from a robust performance in 2023, marked by robust double-digit growth in their GLP-1 therapies platform, Novo Nordisk is at the forefront of the race in the weight loss drug market. Particularly noteworthy is their significant investment in the production of Wegovy, a novel therapy, underlining the company's commitment to leading the charge in addressing weight loss and obesity. In the fiscal year 2023, Novo Nordisk recorded a remarkable 31% surge in revenue to $232.26 billion. Earnings per share soared by an impressive 52% year-over-year, reaching $18.62 per share, fueled by stellar execution and substantial sales growth in diabetes and obesity care. Obesity care sales witnessed a staggering 154% increase from the previous year, and the company achieved a record-setting free cash flow of $83.1 billion. Analysts are maintaining an optimistic outlook, anticipating Novo Nordisk to build on its momentum and achieve a sales growth of over 15% in the fiscal year 2024.
To be human means we face lots of unknowns. We face sickness and disease. At Vertex, we use science to uncover new possibilities that may transform lives. We put people at our core, a focused approach, starting with diseases where we understand the human biology, then searching for solutions.
Nestled in the vibrant biopharmaceutical landscape of Boston, Massachusetts, Vertex Pharmaceuticals is on the brink of a groundbreaking achievement with an imminent FDA approval for a new therapy. This positions Vertex as a top contender for biotech enthusiasts in 2024. The recent years have been a boon for Vertex, witnessing substantial upswings in revenue, free cash flow, and earnings per share. At the heart of this success is Trikafta, their innovative treatment for cystic fibrosis. Yet, what truly ignites investor enthusiasm is Vertex's robust pipeline, promising ample opportunities. In the fiscal year 2023, Vertex saw a commendable 10% year-over-year increase in revenue, soaring to $9.87 billion. Net income reached $3.62 billion, translating to $13.89 per share. The company celebrated record-breaking earnings, both in terms of revenue and EPS, setting the stage for continued growth in the fiscal year 2024. Management anticipates sustained expansion in the cystic fibrosis realm, coupled with the multi-geographical launch of Casgevy. Additionally, they're gearing up to file for VX-548, a groundbreaking treatment targeting acute neuropathic pain. Vertex Pharmaceuticals remains a dynamic force in the biotech arena, poised for further strides in the coming year. Diving into the dynamic realm of biotech, United Therapeutics emerges as a key player, crafting innovative treatments for patients grappling with rare diseases, particularly in the realms of lung diseases and manufacturing. After a stellar financial performance in 2023, this biotech gem seems ready for significant upside. United Therapeutics has been on a winning streak, bolstered by various pipeline opportunities that signal promising growth ahead. Over the past 3 years, their growth narrative has been powered by Tyvaso, a groundbreaking treatment for pulmonary arterial hypertension. Establishing themselves as leaders in this field, the company boasts 6 FDA-approved drugs. Beyond their core focus on lung diseases, United Therapeutics is making notable strides in the realm of regenerative medicine. In their latest financial report for Q4 and the full year of 2023, United Therapeutics showcased a robust performance. Revenue soared by an impressive 20%, reaching $2.32 billion. Earnings per share witnessed a meteoric rise of 32% year-over-year, reaching $19.81 per share, with net income nearly breaching the $1 billion mark. Tyvaso revenue spearheaded this growth, surging by 41%. Fueled by the commercial launch of Tyvaso DPI revenues in June 2022. The outlook for 2024 remains bright, with Chief Operating Officer Michael Benkowitz expressing confidence in the company achieving a $4 billion annual run rate by 2025. This projection implies that revenue is poised to nearly double over the next 2 years, solidifying UTHR's position as one of the top biotech stocks to watch in 2024.
I was studying neuroscience, and one night we were talking about neurodegenerative diseases.
By looking at it from an engineering angle, we could dive into the why of it and address what's actually going on. Why do neurons die?
Once we knew more about why neurons die, we could start looking for what might stop or slow that death.
Amylyx Pharmaceuticals, which is the stock that comes with a bit more adventure. It's a small-cap player, currently sitting at a market cap of around $1.28 billion as of March 2024. For those in the ALS community, Amylyx might be a small fish in the pond, but it's making waves. Why? Well, because their flagship ALS treatment, Relyvrio, got the green light from the FDA back in September 2022. Now, here's where it gets interesting. Despite the revenue ticking upward, AMLX stock did a little cha-cha in the downward direction. Picture this: 4 consecutive quarters of positive earnings, but the stock price doing its own dance move. Part of the price drop might be attributed to the lingering short interest, hanging around 11% in early February. It has dipped a bit since then. Now here's the thing. If Amylyx keeps acing both its top and bottom lines, traders might start scouting for juicier stocks to short. Investing in AMLX is a bit like stepping onto a roller coaster, thrilling, a touch unpredictable, but potentially rewarding. Keep an eye out as the ride unfolds.
On CRISPR gene editing, authorizing a treatment for sickle cell disease and beta thalassemia. DNA acts as an instruction manual for the body. CRISPR technology works like a molecular set of scissors that allow scientists to make targeted edits in DNA, changing genetic code at a precise point in the genome.
Guess what made waves in 2023? CRISPR Therapeutics pulled off a major win when its very own CRISPR-Cas9 technology got the nod of approval from the FDA. It's like hitting a home run after a long partnership tango with Vertex Pharmaceuticals. Now here's the juicy part. This FDA high five is just the beginning. The crystal ball says more approvals are queuing up, and that's why the long-term forecast for CRSP stock is beaming with excitement. It's like they've taken a bit of the risk out of the CRSP stock equation. But yes, there's always a but in the stock world. Before jumping headfirst into CRSP, there's a hurdle to clear. Gene editing is not a cheap date. Insurers are still scratching their heads over how, or even if, they should foot the bill for these procedures. That's a speed bump that might slow down the widespread adoption of CRISPR's tech. And because of this, Some analysts are standing at the $1.80 a share mark, thinking CRISPR might be playing fair at that level. But hey, in the realm of biotech stocks, CRSP is a budget-friendly option. And here's a nugget for you. Cathie Wood, the big shot investor, is waving the CRSP flag. That's like having a seasoned chef vouch for your favorite restaurant. You might want to pay attention. Also, Vertex hopped into the ring with CRISPR Therapeutics. Vertex hopped into the ring with them to get a thumbs up for Casgevy, their gene-editing therapy for sickle cell disease and beta thalassemia. That move alone has analysts peering into their crystal balls, predicting a 2024 revenue of about $10.7 billion, a cozy 8% boost year over year. Now, Casgevy isn't just a star player, it's also Vertex's ticket to diversification beyond its cystic fibrosis kingdom. They're also gearing up to file VX548 for FDA approval around mid-2024. This one's a power move to tackle acute neuropathic pain. Next, let's talk about 3 biotech stocks that seem to be on a not-so-great trajectory. And it might just be the right time to wave them goodbye. Now, we all know healthcare stocks, especially the biotech crowd, can be a bit of a roller coaster. Their stock prices swing like Tarzan in the jungle, all hinging on clinical trials, regulatory nods, or just about anything that can make or break a company. But here's the catch. Some of these biotech companies are like stars that have started losing their shine, and sticking around might not be the best plan if you're looking for returns.
COVID vaccine made by Novavax works in a different way from the ones already approved for use here in the U.S. News 8's Marcella Lee shows us the science behind it.
Let's unpack the Novavax situation. This company, big on vaccines for infectious diseases, had a major moment in the sun back in early 2021 when their COVID-19 vaccine got the green light. Shares were riding high at around $300 and life was good. But, and there's always a but, things took a different turn. Fast forward to today, and those once sky-high shares have taken a nosedive, hovering around $5. The recent financial report card for the fourth quarter and the full year of 2023 didn't exactly get the gold star. Total revenue took a 19% dip, and while the net loss did slim down by 2%, coming in at $178 million, it wasn't the kind of slimming anyone celebrates. This news hit the stock hard, causing a 27% drop as it missed the mark set by analysts. Ouch!
It all started with isolation of the virus from an infected patient in China. The coronavirus was sequenced and its genetic information was uploaded to a public database. Working together, scientists at the NIH and Moderna identified the sequence for a key protein on the surface of the virus, called the spike protein, as a good vaccine candidate.
All right, let's dig into Moderna's story. This biotech star with a focus on mRNA vaccines had its heyday back in 2021 when its COVID-19 vaccine hit the scene. Shares were riding high on the pandemic wave, but like many things, the buzz started to fade. In the past year, those once high-flying shares have taken a hit, sliding about 33%. Fast forward to the latest financial chapter in Moderna's book, the Q4 report for the full year of 2023. The numbers didn't exactly throw a party. Total revenue took a 45% nosedive, and net income plummeted by a whopping 85% compared to the previous year. Ouch! Yet, in a twist of fate, the stock actually saw a 14% uptick post this report because, well, it beat the estimates. Now here's the kicker. Despite this temporary boost, Moderna is dealing with a reality check. Its golden goose, the COVID-19 vaccine, is seeing a sharp decline in sales, and that's pretty much the heart of its business. There's a hopeful glance toward a respiratory syncytial virus, RSV, vaccine in the pipeline, but it's not a done deal, and competition is fierce.
I would say that the company's made really great strides, particularly over the past couple of years, in terms of expanding their drug discovery and development pipeline. You know, the company started out as a pioneer of guanylate cyclase cGMP biology. The first target was in the intestines, And there we were successful in developing a new drug for irritable bowel syndrome as well as chronic constipation. But what we learned from that led us to develop a number of other new potential medicines that impact not just the gut, but other parts of the body as well. And so the science has really expanded from what we initially learned.
So let's talk about Ironwood Pharmaceuticals, the folks dealing with therapies for gastrointestinal issues, and their star player, Linzess, the go-to treatment for irritable bowel syndrome. Now, Ironwood's share price had quite the roller coaster ride. Picture this, a staggering 38% drop after a phase 3 trial for a potential short bowel syndrome drug. The twist here is that the top-line results were actually positive. But, and it's a big but, the company stumbled on several secondary endpoints, and investors weren't having it. Shares were offloaded. Just before this clinical trial drama, Ironwood was enjoying a solid run with its share price on a consistent upward trajectory. But hey, that's the biotech world for you, volatile and unpredictable. In just one day, Ironwood waved goodbye to most of its gains over the past year. So, where does this leave Ironwood? The big question mark is how the stock will bounce back after this major setback. It's a waiting game to see if they can shake off the clinical trial blues and regain their footing in the market. Keep an eye on IRWD. It's definitely a biotech tale worth watching.